This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus will have little room to maneuver on oil policy when it meets in December. It would be risky to increase output because of weak demand, and difficult to deepen supply cuts because some members want to pump more, sources and analysts said. The OPEC Plus, which pumps around half the world's oil, has already delayed a plan to gradually lift production by several months this year. It may push back output increases again when it meets on December 1st due to weak global oil demand, according to 3 OPEC Plus sources familiar with the discussions. Ministers last shelved the increase for a month when they met virtually on November 3rd.
U.S. crude oil and gasoline inventories last week rose more than forecast, while distillate stockpiles posted a larger than expected draw, the Energy Information Administration said on Wednesday. Crude inventories rose by 545,000 barrels to 430.3 million barrels in the week ended November 15, the AIA said, compared with analysts' expectations in a Reuters poll for a 138,000 barrel rise. Crude stocks at the Cushing, Oklahoma, delivery hub fell by 140,000 barrels in the week, the EIA said. Net U.S. crude imports rose last week by 237,000 barrels per day, BPD, to 3.3 million barrels of oil per day, with imports to the Gulf Coast hitting 2 million barrels of oil per day, the highest since July 2020, the EIA said.
Moving on to the top news in the energy sector.
Oil prices rose marginally on Thursday as geopolitical concerns over escalating tensions between Russia and Ukraine countered the impact from a bigger-than-expected increase in U.S. crude inventories. Brent crude futures rose 16 cents, or 0.2%, to $72.97 as of 04:08 GMT. U.S. West Texas Intermediate crude futures rose 16 cents, or 0.23%, to $68.91. Ukraine fired a volley of British Storm Shadow cruise missiles into Russia on Wednesday, the latest new Western weapon it has been permitted to use on Russian targets a day after it fired US ATACMS missiles.
Top thermal coal exporter Indonesia, one of the world's largest carbon emitters, is aiming to reduce coal-fired power to 33% in its energy mix by 2040 and increase the share of renewable energy production to 42%, a senior minister said. President Prabowo Subianto this week said Southeast Asia's biggest economy plans to retire all coal and fossil fuel power plants within the next 15 years to help reach net zero emissions before 2050, a decade earlier than previously targeted. Indonesia would need investment of $235 billion to achieve that goal, as it needs to build renewable energy plants with 75 gigawatt capacity and 70,000 kilometers, 43,500 miles, of transmission lines. Next, we have the top news in metal markets. Gold prices rose for a fourth straight session on Thursday, driven by safe haven demand amid escalating tensions in the Russia-Ukraine conflict, while investors awaited remarks from U.S. Federal Reserve policymakers on the interest rate outlook. Spot gold was up 0.3% at $2,657.40 per ounce, as of 0547 GMT, hitting its highest since November 11. U.S. gold futures rose 0.3% to $2,659.90. The escalation in the Ukraine war and subsequent fears of a broader regional conflict that involves increasing threats of nuclear weapons are pushing up prices, said Kyle Rada, financial market analyst at Capital.com.
The global zinc market deficit edged down to 79,500 metric tons in September from 85,000 tons in August, data from the International Lead and Zinc Study Group showed on Wednesday. During the first 9 months of 2024 there was a global deficit of 8,000 tons, compared with a surplus of 358,000 tons in the same period last year.
We will now look at the top news in the agricultural sector.
China's soybean imports from the U.S. more than doubled in October from a year earlier, marking a 7th month of growth, as buyers accelerated shipments fearing a rise in trade tensions if Donald Trump were to return to the White House. Trump won the U.S. presidential election the following month in a comeback that is likely to reignite trade tensions between Washington and Beijing. According to traders and analysts, tariff threats in Trump's campaign speeches have led some Chinese importers to shun U.S. shipments starting in January.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.